Good afternoon, UK. This is Tim. I'm your host on the Buzz. Today it's Thursday today, so Thursdays mean finance talk, anything to do with money. We got Chris coming on the show today, and he'll be breaking down conversations around fintech and what you could actually learn about fintech, what the history is, where it's applied, how you actually use it, just bring into awareness these things. So be a relaxed radio. You know where to, how to get in touch with us. You can comment on this video. You can call us up on 07852473473. This video is live, so feel free to drop your comments on this video here. Share it with your friends that might be interested, and let us know what your take is. So we've got Chris on today. Hi, Chris.
Hey, Tim. How you doing?
We're doing good, Chris. We're doing good. So from last week, we were talking about the topics around business and how it comes to how things around calculating businessman's money or net worth, and even if it comes to a company, how you calculate the net worth of a company, right? Things like that. Now we'll be breaking down from going forward. We're actually going to be breaking down a lot of the highlights of the videos that key points of the videos that we've actually been talking about, and then bringing that onto our social media platforms so people can actually share it, go back, reflect on what we've been talking about, and actually learn or save it somewhere, share it with their friends, and get more, basically learn more about finance and what we talk about, right?
Right.
So
yeah.
So today, before we run a quick intro on who we are at Relax Radio, Chris, do you want to break down what you will be actually talking in the lines of fintech, and how it is relevant to us, why we need to know what fintech is?
Yeah, I mean, fintech's a broad subject, and a lot of people actually use fintech every day without realizing it. So we can check out where that is and where that sits in the industry and in our lives, and also how fintech is evolving and how it is going to change the way we do things. However, it's been around a lot longer than we think. So we can have a look at which industries use it the most and where the innovation is likely to come. So it should be quite interesting.
Awesome. Looking forward to it, Chris, as always. So what I'm going to do is I'm going to show a quick couple of videos of who we are at Relax Radio, and we'll be right back. Stay tuned. That's right. This is Relax Radio. We're with you on Instagram, Facebook, YouTube, all platforms. Ready, convenient for you to, feel free to watch or listen to us wherever you are. We are on the Play Store and Google Play as well. We go as Relax Radio. That's RELAKS Radio. So coming back to the topic, we have Chris till 1 p.m. now talking about fintech and the importance of it, what you need to know, how you are actually using it, how it came about actually. Also, things like PayPal, if you didn't know, it is finance and tech integrated, right? So Chris, the stage is yours. We can start your show.
Yeah, well, exactly. I mean, as you said, fintech is kind of financial technology, and they hive it off for some reason. I don't know why. I guess because it's a whole industry on its own, and it's been around for a while. I remember, I'm old enough to remember the first iterations of fintech coming into the financial markets, because I was an open cry trader. I was one of the guys that traded manually on the stock exchanges in the early 90s. And we saw the emergence of computers, and then we saw the emergence of platforms which allow people to trade rather than rely on the manual efforts of human beings. And it, created liquidity. It enabled people to trade a lot faster. It was, more transparent. And so, from pretty much the 90s, we saw this trend accelerating. I lost my job as an open cry trader and became a what was called then a desk trader, or I traded on an online system. So I had to retrain in those days to trade on these systems, which was very different. And so a real early experience in my life of fintech disrupting the marketplace for the better, and that was good. And that's all evolved. So a lot of that technology that was developed then has just been iterated throughout the decades to now, and it does get used in a lot of other platforms and places. So the main uses for fintech at the moment are generally we see it in the banking sector, but mainly we see it in the trading sector. It hasn't come to retail as much as it has in the professional financial arena. And I think there's a couple of reasons for this. One being money. In the institutional and professional trading environment, the monies, as we've seen in the news, are astronomical. So, they've got these big budgets. And the technology innovations that were made there were mainly to do with when we spoke a couple of weeks ago about pricing and value of assets and things. These are where a lot of the innovations came, so that these traders could gain an edge and value these stocks and assets quicker than someone else to, of course, hopefully buy low and sell high. So there were all kind of what we call stochastic modeling software and what we call Monte Carlo software. Now, that has started to come into the public domain, which is wonderful, because with the internet becoming better and better and more accessible and people trusting it more, we see trading platforms such as eToro, such as ING, such as Interactive Investors, which are basically for the public to trade as a professional would if you had the knowledge. You don't have all the tools because you need specialized training for that, and I'll go into that in a minute. But they are using some very, very sophisticated software there to allow you to have a look at various graphs, at various ways stocks trade, at various pricing models. And that is real top of the line fintech stuff. I mean, a professional trader today usually uses a Bloomberg terminal. It is a special computer. You generally see it on Bloomberg. If you watch any newscast in Bloomberg, you'll see terminal screens. These terminals cost upwards of $20,000 a month to rent. You can never own it, and it gives very specialist information for traders. So it's not accessible to retail. So that fintech is out of the retail, which is a shame, but it'll leak through, right? It's like Formula One. You get the innovation, and then it goes onto your road car in a couple of years. So that'll come through.
So how would you say fintech has changed, or how would you compare, since you've got a touch or a taste of both the traditional and the more innovative side of things? How would you say it's different from a trader's perspective?
Yeah, look, on the professional side, it's created liquidity and allowed more business to be done, which I guess in a capitalist environment is a good thing, right? It's also created a new generation of traders or financial people Where
Yeah.
when I first started in finance, specifically in stockbroking, your social skills were as important as your intellectual skills. So it didn't matter if you had a PhD in economics and you couldn't speak to someone, you wouldn't be a good trader. But if you just had a finance degree and you were fairly good at speaking to people and you were sociable, so you would be a good trader because you had to form real human connection in order to do a trade at the right price and the right volume. Now, that's no longer the case because most traders are trading with other people that they never even meet. And in a lot of senses, they trade with a computer. You've got what we term algo trading, right? Which is basically what it is. It's algorithm trading, and it's just a set of rules that are being put into a computer, and that computer just trades. And the reason it's good at doing it is because computers were built for one thing, repeating tasks. And that's what they can do. They can just repeat that. So traders have a very different skill set now. They do have to understand a little bit more, not only around finance, but around technology and how the underlying bits work, because they're no longer getting access to the underlying mathematical functions anymore. So while we'll learn the maths when we do the degree or the vocational qualifications such as a CFA, Chartered Financial Analyst, you don't generally have to use that stuff anymore. And if you don't use it, you lose it, right? But they understand the technology side of it, which is great. I think it's just an evolution on the professional side, which is good. The downside of that is the fintech innovation, most of it over the last 20 years, has been restricted to this sector. It hasn't really branched out. I mean, if I log on to my Lloyd's banking webpage today to do my online banking, not much has changed over the last 20 years. There's no real innovation there, right? Yes, maybe the interface looks a bit different and it might be a bit slicker, but there's not real any change. I can't, there's no wow functions or anything that are in there, and that's true for most of the retail sector, unfortunately. So with the trade.
That's interesting coming from you because usually, I mean, I'd say part of the reason why is because people are more used to using things that they're familiar with, right? And I mean, I'm pretty sure you would agree with me if I say that majority of people are still not too familiar with, just like the Lloyd's Bank app that you said you spoke about. People are still, getting used to it. And then in terms of that, maybe the concentration on innovation is not as much yet, but the concentration must be, converting people from the traditional side to what is, currently served as a product. What is your take on that?
No, definitely. It's I'm not saying the banks haven't innovated. I'm just saying we don't see it, right? I think there's still a lot of innovation in the background. Like in the UK, tap to pay now is pretty much universally accepted. I mean, I remember when it first came out, you just tap it and you pay. And there is a little bit of nervousness, right? What if someone just goes tapping wallets? That kind of thing.
Exactly. I mean, you could have your wallet on your back pocket, and then people could just come tap their machine on your butt and just run off with your cash. Right?
But it doesn't happen, right? So that's okay. But you're exactly right. Those are the kind of fears that people have. So the innovation from the retail sector has been more in the background. Very much so. They haven't stood still by any means. And I think one of the drivers of that is the digital currency, as we spoke about last week, how currency is created. I'm not talking about Bitcoin. I'm talking about the actual currency that we use, and most of it is digital, right? So how do they create more of it more efficiently, and how do they do that? Now, you got to remember that all fintech models currently sit on top of the current capitalist model. So there's no new foundation that this is being built on, like other technology gets to do. it's hard to break away from it. I mean, I was thinking about this when we were doing the subjects, and I thought, you look at the challenger banks here in the UK, like Starling Bank and Monzo and these guys. Fantastic model. I mean, it's wonderful. I'm a Starling customer, and I opened the bank account within minutes from my mobile phone. There's no branches. There's no fees. And I have my business account with them, and there's a card, and it's transactable and everything. And then I thought, that's great, but it still isn't an innovator. It's an iterator. Now, just to explain those two terms, we look at it one way like this. We say you have a product, and if you make that product better, it's an N+1, right? Which is an iteration. But if you develop a new product, and I'm talking the easiest ones to remember are the iPod and the iPhone and those kind of things, you go from 0 to 1. So you've innovated. And then I thought, well, these challenger banks, they actually innovated something, but they haven't. They've iterated. So all they've done is they've cut the costs, they've cut the bureaucracy, they've cut a lot of the old school banking models. However, it's still the same banking model because they still need the same banking license. And how I know this is because on my app, they want to loan me money. And then my agreement says, if you look through the agreement, we can loan out your money. So they have a capital requirement. That fractional lending, they do exactly the same. So it's exact same model, just better, which is great. There's nothing wrong with iteration, but I think definitely fintech, has such a opportunity to innovate, but it's not being done at the moment.
Yeah, and now I see what you mean now. I mean, after you explained it, after you broke it down like that, because so it's basically the same product. It's just that the experience is different, right?
Well, exactly. So, and they've taken a lot of the processes out. So if you have a branch in a bank, then there's a whole host of regulations that need to be followed in order to ensure the consumer or layperson, as they like to say it out of finance, is protected, and their money is protected, and the rules are followed. So it is by no means an easy task to clarify or cut through all of this, but these challenger banks have managed to do so. They first started, now remember, they started without banking licenses. So they started on a transactional basis, which was clever. And then they can get a depositing license. Now they have banking licenses. That gives them the ability to do the fractional lending, which allows them to start creating the profits. So pretty much like Facebook did or Google, they attracted the clients in. Now, once the clients are in, they have that base to be able to make profit from, which is fine. There's nothing wrong with it, but it's not a new model. When PayPal first came out in the 90s, again, it wasn't a new model, but it was online, which was new. So it was a radical iteration still. It still wasn't an innovation. As much as Elon Musk likes to think it was, but it was on the same model. And very clever. There's no doubt about it, and still goes today.
Yeah.
So
to break down, I think what we can do is, if you, I mean, just to pause you there for a second, pause your train of thought there for a second. We'll have to jump into a couple of videos, but then before that, to talk about PayPal, to break it down in the lines of what the processors were before, and how he or the PayPal team have basically, there was a bit of drama there with the founders, and if you have put some research into it, there was a couple of others that were actually competing with him, but they eventually came together before they went large, at least. So to talk about PayPal, what I think we can do is also break down what processes were like before and then what it is like now, compare the two as well, and see. I think we can also even brainstorm some ideas as to how banks, for instance, could use fintech to innovate their products instead of just iterate, right? So what we'll do is we'll run through a couple of videos on who we are at Relax Radio, And Chris will be talking about how PayPal basically came up and then what PayPal is doing for majority of the population around the world now. And I mean, we'll be just breaking down things around how banks can actually innovate in terms of products using finance and technology. Stay tuned. That is right. We're Relax Radio. We're on Facebook, Instagram, streaming on the App Store, also on Google Play. If you want to download our app, it's free. You can download it now and have Relax Radio in your ears, basically wherever you go. So coming back to the conversation with Chris, we're talking about fintech and breaking down things around what PayPal is now and what exactly PayPal does and how it's basically worked instead of an innovator as such, but taking it in the lines of how it's bringing convenience to people around the world. Chris, yeah, we can continue to talk about PayPal?
So, I mean, back in the day, you know, when I was young, you had to go into a bank. We had checkbooks. I mean, you can just imagine it was an actual physical check, which was an IOU that we transacted with. Yes, there were credit cards, but they were few and far between. And cash was you had cash. You paid for cash. You got change. You carried around coins. You had these coin jars in your house to hold all this currency. And PayPal innovated that and said, look, why do we need all this? Why do we need all of these checks? Why do we need all of these bureaucracies when we can facilitate these through the same system, being the SWIFT system, which is the worldwide, transaction system, and do it a lot quicker for people without all these checks, without using currency, without using money. And they were kind of the first say this is a digital economy. We want to get away with cash, right? Which was a massive, massive, massive sea change in those places. And you're right, there were a few others actually doing it, and it was XPay who were the if my memory serves, I don't have anything in front of me, but I think it was XPay who were downstairs from them while Elon was developing his Maps app, because in those days we didn't even have GPS maps. It was only used for military, and they joined forces, and Peter Thiel and all the boys. So which was good, right? Which allowed the banks to see this innovation actually work.
Yeah. So I mean, from where it was to come to a point where people actually trust a single platform. I mean, for sure it's been over time, but for it to come to a point where it's $45 billion worth, and to basically, it's basically couriering money for people, and it guarantees people the safety in terms of delivery, and things like that. I mean, so how do you think this so much of trust could move into this now? We know people are dumping billions into things like the blockchain as well, and how do people actually how else could banks utilize this, or financial institutions? How do you, as a professional that has been in the market or been in the industry for decades, how do you think you could personally have you considered any integrations with tech to provide better solutions or innovative solutions? I understand it's a very relatively monotonous process, but then how any processes you think you could integrate with operations?
Yeah, there's lots, right? And we see it happening. We see iterations of it all the time. As an example, let's move away from the institutional sector and into the retail sector, where people not on their everyday transactional banking, but on their financial life transacting. So we go everywhere from home and car insurance through to mortgages, through to life insurance and critical illness, disability, through to savings, investments, pensions, and including estate planning. Now, we've seen innovations in this area, and this is the area I currently work in, not in fintech, but as a financial advisor, as you know. And so a lot of the processes have gone online. But what all they've done is they've taken the physical process and just transposed it online. So I have the same forms to fill in. I just do them online now and press a button, which is great and a bit easier and a less, I guess, a little bit less intimidating for a client. And then, of course, what the client can do is they can go online and see their account anytime they want and see real-time performance. Not real-time, it's generally a day delayed, but still, I mean, and they can see what it's performing and where they are. We even have systems where clients can actually deposit monies into their tax-efficient savings accounts without using me, which I welcome. I started in the finance industry. I've been ousted by technology and had to relearn and then go again. I want to be ousted again because that means we're progressing. So to give you a kind of flavor of where I'm coming from, I work as a financial advisor and an intermediary. And what does that mean? As an intermediary, we sit between the banks and the insurance companies and the consumer for 95% of their products. And why? The main reason is those large companies can transfer their risk to me. And so the consumer only deals with me. I take the risk. Hence why we have regulation licenses, we have professional indemnity insurance and all those kind of things. So for those large companies, it's great. They're not really taking any risk on things. Yes, things do go wrong, but generally the advisor pays. So the consumer's not seeing any benefit, but the big companies are. What happens when you disintermediate? Well, now that life company, as an example, because this is the easiest example to give, has now got to take the risk. So unfortunately, what they do is to compensate for that additional risk is they raise the price of their products. And we see that happening.
Yeah.
If someone comes to me and buys life insurance from a large insurance company, let's say it costs £100 a month. If they go direct to that insurance company, the exact same underwriting, the exact same risk profile, it'll cost £120 a month because the insurance company. So we've got to sort that out as well. But if you could disintermediate the financial advice process, that would start to go a long way. And there's a lot of ideas going out there, and I'm busy developing stuff as well because I'm a developer part-time, where what people can do is they can go online, they can enter their information, and they can get advice, like real advice from a computer. It's just a decision tree, but how that helps them in today's market is then they can come to someone like me armed with the necessary information to say, hang on, you're financial advisors. You're not a very trusted industry, right? We haven't been for a long time because yes, there's all this selling and selling. But so now you can go armed with the information. You can say, hang on, why aren't you telling me this? Or why are you telling me this? Or why do I need this? And suddenly you can start to feel a bit comfortable, can gain trust. I think that starts to become the first step. The second,
to stop you there for a second, Chris. Now, I mean, like you said, when it comes to a conversation with, off the website, for instance, it's a chatbot, right? And the chatbot basically, sometimes it's programmed by artificial intelligence. It knows the next question that majority of customers are going to ask, and then it has the answer for those as well. Like you said, it's a decision tree. So when it comes to you, with the point of contact for you and the customer, how does it, or what value do you think you could add from that point, and how do you see yourself maintaining your worth as a solution in the system there?
So what's very important and what people don't realize, especially in the job I do now as a financial advisor, is I don't generally need to provide solutions because the tax system is well set out, the solutions are well set out. And so when I meet someone and I talk to them, I pretty much know the mix and match that would suit them best at that time, right? So that's, as you say, it's pretty homogenous. All qualified financial advisors can do that. But where we as financial advisors provide real value to people is by connecting to them on a personal level, which a computer can't do. And I don't think in our lifetime it will be able to. If it does, great. And it's this personal connection that allows someone to assess whether that out-of-the-box solution or not out-of-the-box solution is actually appropriate. Because, you have someone, you say, look, the best place for you right now to put your cash is in a pension, right? But let's say that person just actually has an issue with not being able to access their money. They don't have an issue with pensions. They don't have an issue with savings. They don't have an issue with investments. They just get quite emotional, and people do, right, around currency, especially their own, with not being able to access that money for any reason whatsoever, i.e., I'm now 47 years old. I can't access the money until I'm 55. Oh, no, I don't, computer won't pick that up where we can. So then we can create alternate solutions that benefit them. Also, what is very, very important from a financial advisor's point of view is to give clients a place to vent and also to bounce ideas off. So we had the latest in a lot of blips around the road of our COVID-19 stock market volatility. And we track these things, right? As an industry, we track them. Okay, so all the clients who had financial advisors versus all the clients who didn't have financial advisors, who did better in crisis, right? At 100%,
Right.
it's always those with the financial advisors. Why? Because let's say we're all using the same fintech and we've got some great, great trading tools that I can use and our clients can use that can, they call it a robo-advisor, but it's not. All it is a automatic asset allocation and trading tool. That's all it is. It's not advising you. What it's saying is at your risk level, do this and that, right? And as an advisor, we say, look, we're in for the long term. Don't panic. This is where we're going. We have a chat through it, And so the person generally, in most cases, doesn't move their money. And then generally, in most cases, that's the right call to make over time. Because we always see when the market dips down, it goes back up, right, over time. The people who don't have the advisor and those who are doing it themselves, and make no mistake, they can do just as good a job of investing as I can because the fintech is out there for them to do it. They may not be as tax efficient and it may not be wrapped in a trust and it may not be those kind of things. However, their returns may be just the same, but they didn't have someone to chat to. They didn't have someone to bounce it off. And you know what they did?
Correct.
They sold. And then they say, no, but we'll buy on the way back up. Great. So they do that. And their timing is perfect. No one's timing is perfect. But let's say theirs are, because that's how we modeled it. There was still, I think, over a 15-year period, there was still 20% less, 20% worse off. So you're talking about an advisor adding 1.5% to 2% per year of value to a client's portfolio, not because they can invest better, not because they're more knowledgeable, not because they pretend to do anything better, although we do have processes and systems which help us assess a little bit better than a layperson, but because we're humans and we can sit there and talk. And I think that's what's missed in fintech a lot. I think people think fintech is all going to be technology, all going to be digital, and we're all going to be running around and it's all going to be wonderful. But no, I think the emotional content of finance will always be there. People will always be scared, greedy, worried, So people go between happy and sad. If you look, you go to an old fastness here in Britain, and you on a Friday or a Saturday night, I don't know when the lottery is, but whenever the lottery is, and you see all these happy people walking in to buy their lottery ticket, right? And then you go to the same shop on a Sunday where they go to check if they've won, and you see them all coming out sad, right? So that's the same as the market. It's like happy, sad. So we got to modulate that for people so that they stay the course for the long term, because that's how we plan. And we try to take their emotion out of it, so that they benefit. So I think that's it's an important thing. So.
Yeah, I mean, I completely agree with what you're saying, because if you are anyways going to study or depend on the advice that a computer or a machine might give you, at least as of now, I think it'll take ages for it to understand the other variables, because it just learns with history, right? Now, for example, I was thinking if AI, which is definitely been integrated into things like trading stocks, things like the stock values of companies or anything of that sort, even if it's in the private sector, regardless of which country you are in, within the last 2 years, it would have been very confused in the lines of with the pandemic conversation coming into play, the whole market going red, and I mean, if you are to depend on something of AI, for instance, in terms of advice, that will be giving you history of the fact of the knowledge gained from, or the information gained from the last 2 years, which would not be very predictable, nor would it be very reliable for the next 3 to 5 years at least, right? So that, for instance, I mean, I completely agree with you on that. And also how people understand the different situations that come into play. I mean, everyone, I mean, for example, if you were reporting hypothetical situation, if you were reporting to an investor that is basically a computer, it wouldn't really try to understand your numbers and the relatively bad performance last year, because it would have probably just expected an increase from 2019, right? But I mean, whereas people would definitely understand the story as to how they will have also, undergone some kind of depression in terms of finance or something of that sort. If I'm missing out on anything in terms of this, just feel free to add, Chris. Because anything apart from that, I think if we are talking finance, is there any other solutions that you think you could actually, you personally might have thought of in terms of integrating with solutions? What type of requirements do you think people need to get onto or integrate with when it comes to tech in the finance industry?
Look, I think people are using technology now more than ever, which is great. And the trend is accelerating.
And they're trusting it so much faster.
100%, exactly. And I'm not just talking about millennials or, the younger generations. I'm talking about the baby boomers, generations older than me who never grew up with this, because the software is becoming innovative. It's that herd mentality, right? If 10 million people are doing it, we got to trust it, right? And it's shown, technology has now had time to prove that it is not 100%, but it is pretty secure in dealing with our transactions day to day and various other bits. I think so. From that standpoint, I think what we've got to do is sit down and think, okay, hang on, how do we collate this information from people? Then how do we use it? Then how do we present it? And then how do we make it into a solution that is viable for each individual? And I think that's where the innovation needs to come from. I sat down once a few years ago and I gave myself a challenge. I said, can I present a financial report which would include life cover, mortgages, pensions, investments, tax, all of these things that we do as financial planners, without using any numbers or graphs or words? And I came up with a solution. I still have to develop it, and it's pretty radical. However, it shows that there are things out there that we can, use to make our lives easier, especially in the financial world. So let's look at it this way. We have separate financial systems all over the place. You have your banking system, then you have your HMRC tax system, then you have your company system, then you have your accounting system, then you have your pension system, then your life cover, your insurances, your mortgages, your borrowings. It's just everywhere, right? And these are all separate systems, and a lot of them are legacy systems. Come on, guys. I know we can kind of integrate some of it now with open banking platforms and things like that, but it's not that great, right? What we need to be able to do is to allow people to bring everything together in one place without having to change where they are or change providers or change advisors or, do any step change, and then allow them to transact through that one portal or one platform or one app on all of their bits, and then also allow them to see everything together. What I find most when I speak to clients is it's very hard, even for me, when I'm advising them, to get a holistic view of everything they've got. Because life happens, and that's normal. Things are everywhere, especially in places like the UK. If you've had 4 or 5 jobs, that means you've got 4 or 5 pensions scattered about the place. You don't even have a personal pension. And some of my clients have gone overseas, so now they've got an overseas pension. Oh, and there may be a bank account there, but I'm not too sure. And I did it. I had a life cover. I don't even know if it's going yet. These are the kind of conversations we have. So if we can use technology to integrate all this so that a client can see their holistic picture, I think a couple of things will happen. A, they will engage with finance a lot more because people don't. They don't engage with it. Yes, we are to blame as financial advisors for a lot of it, but that's legacy stuff. We don't sell anymore. We're not allowed to sell. You're not even allowed to cold call. I don't need to sell anymore. We have conversations about what a person should do. We give them the power to make the choice to do it, and then we help them do it, and we service them. That's how we do it. And then the second thing is people are worried. They're scared. They're not sure. They're, I don't have £1 million. Well, you don't need £1 million. You you can start with £50 a month into an ISA. Yes, you don't come to me for that. You go to your bank, which is great because it's low cost, very good product for that level. Once you get up and you start building your life, then you go to the varying people at the varying levels. And I think fintech or technology could help people understand that a bit more as well. So,
I completely agree there. I mean, we're still, I'd say, we're still only a couple of steps into the digital age, right? And to see things like, I know it's a bit of a volatile conversation right now, but then blockchain or crypto kind of things, people are, still holding on to the cash that they've invested in, or the currencies that they've invested in, because people do believe in the future of currency that it's going to be all digital, or at least up to some extent, right? So
it already is
things
digital.
like that.
Remember, it's already digital. Crypto is just a different digital.
Yeah. It's what would you say? Would you say it's digital, and how would you say that it is really different from the currency that we call or we use in majority today?
Well, it's
Is
like
it
I
the
said,
institutions that govern the values of it, or?
remember when we had the currency discussion, right? It's still fiat currency. The only difference is it's not centrally governed. Yeah. So it's decentralized, which is good, which is why blockchain is such okay. Blockchain is an innovation. It really is. However, it's just not good enough at the moment. What I mean by good enough is it can't handle the transactions necessary for it to scale correctly. You've seen, you just go on the internet and just Google it. I think, you look at the Zwift network and it can handle, I'm making up a number here, but it can handle 1,000 or 10,000 or 1,000,000 transactions a second, and blockchain can handle one. And I'm making those numbers up, by the way, but there is a large disparity between the two. And if blockchain could get the methods and protocols right to enable it to challenge the Zwift network on a transactional basis, where I can actually walk into a shop, tap my card, and get immediate verification that has been done, whether it is Bitcoin, Dogecoin, Ethereum, or Chris Slater Jones coin, which doesn't exist, by the way. Don't invest in it. Then
just in case, because there's so many people coming up with different types of coins, right?
Yeah, the coffee's hot. Anyway, but then we'll have a real chance. And blockchain then can underline, because it already underlines a lot of fintech for the reason is it's so safe, but then it can underline a lot of stuff, right? And I think we could really start innovating on top of it. However, here's the downside of open source. No one's getting paid to develop it. So people only develop what they want to develop using it so that they can make money, not the not the greater good. And I'm not disparaging all the white hats out there who will come and, bash me over the head. But guys, we need some proper innovation. I know no one's getting paid to do it. So if someone was getting paid for it and spent, you've got some very clever guys out there, I reckon they could speed that up. I think they could get that verification process a lot slicker. But yeah.
When you say no one's getting paid for it, well, okay, as far as I am aware, people, when it comes to this, people are being paid in whichever particular coin or currency, right? To find
but not
the
in the blockchain
code. Okay. Oh yeah.
If you write blockchain code, which is the underlying code, you don't get paid. That's why you have to develop a coin or something on top of it.
Absolutely.
So no one's actually innovating or developing or iterating that bottom layer. So it's remaining slow relative to what we currently have.
Yeah. I hear you in that sense. Yeah. So we're coming down to the last 7 minutes of the show with Chris today. What we'll do is we'll run through a couple of other videos of who we are again at Relax Radio. And Chris, what more do you think before we come back, before we head out for a bit? What do you think we need to, what topics do you think you'll be talking about? What do you think we can actually, give to the audience before we wrap it up for the day?
What moving forward? I think, as you said, going over what we did before, and I was looking at some notes actually, and there's a few bits, but it's around personal financial planning as well, which I think is quite important. And what I was thinking is a personal financial planning series, so that people get an idea of what they should set up in their financial lives, not only to make their lives easier, but to help their loved ones and to protect themselves going through. So we could start off with the insurances, which are important, which people tend to think, oh, you're selling me rubbish, and then go through that to mortgages and debt and through to and each one can be a show, through to pensions and investments and savings, and of course tax.
We'll do a quick breakdown of that before we wrap up for the day. We have another 6 minutes, but we'll run through a couple of quick videos and be right back for that. Stay tuned.
Again, but now, if you say to a child, if I went up to a child and said, you've had one to forget, God, there'd be an inquest. Me, why did you reject my son? Well, I haven't rejected your son.
I want to talk about, how the generation gap, how much has changed, especially when you check the youth nowadays in comparison, to people back in the day.
I'd say when I was younger, it was more disciplined. Not now.
In comparison to now.
Not at all. Not now. The way things are nowadays, the younger generation, you seem that they can't accept the word no. If that makes sense. They can't
accept rejection, essentially, is all you're trying to say.
Yeah, they can't accept the word no. So if you how did I do? Or you didn't do very well, and they get upset, And when I was a youngster, my father used to say to me, because I used to be sport mad when I was very young, well, I still am sport mad, but like participating in different sports. And if I had a bad game, for example, he might say to me, you had one to forget. That's it.
Your dad sounds like a smart guy. I mean, that's the real fact of the matter, yeah.
He said to me, you had one to forget. Get over it. And that was it. So I dust myself down and do it again. But now, if you say to a child, if I went up to a child and said, you've had one to forget, God, there'd be an inquest. An inquest. Me. Why did you reject my son? Well, I haven't rejected your son. Or daughter. I've just told them that they need to buck their ideas up.
That's the truth right there. I mean, if you think about it, if you check the generations, like right now in the US as well, I've seen a lot of these things as well. In the UK, you get medals for participation. But what's the point? What are you trying to? Yeah, what's the point? How do you win or you lose? People are so afraid to put that whole notion of lose. You know, when it comes to right now, the generation gap is just crazy. You know how much. A lot has changed. Social media has taken control of our lives, and we don't even realize it anymore. We're crippled because of it.
That's absolutely right, Nick. Because, as you said, you know, nowadays it seems that you get rewarded for failure. You know, for the life of me, Nick, I can't get my head around that. Perhaps I'm just getting old and morbid. I don't know. I just can't get my head around how you could be rewarded for failure.
Yeah, so just before we wrap up, we've got Chris, that's going to brief up about a few things that we're going to be mentioning in the next few weeks. Or I think me personally, I've noticed so many people come into awareness or come into realization that finance or your financial stability, not just buying glamorous stuff or not just buying things to impress other people. That's not it, right? I mean, at the end of the day, if something like the pandemic hits, you realize what you're actually going to need at the end of the day. In terms of savings, in terms of investments, what you will need, looking after your family, things like that, right? So I mean, now that we've come to a point where we are aware of a possibility like this. I mean, it's not the most often occurrence, but then things like that, we can actually, if you are keen on understanding how you can set yourself for the future, or set yourself straight for a situation like such. We've got Chris coming in on Thursdays from 12 to 1, breaking down how you can actually increase your net worth, helping you get some food for thought when it comes to building your worth or building your financial literacy.
So let's do this, Tim. It's a personal financial series, right? We'll start on insurances as a show, then do mortgage and debt, which is cash and borrowings. And I'll send you all this, by the way. Then we'll do tax.
Yeah, awesome.
Then we'll do tax. Then we'll do investment and savings. Then we'll do pensions. Then we'll do estate planning. and each one will be a show. Each one will be involved. We'll go into into a lot of depth around it and what it involves, and hopefully, what we can get through that series is people thinking, well, actually, it's not that bad, right? It's not as scary as I thought, and they can go to their bank or their financial advisor, wherever they are, and have a conversation. So let's see if we can get it done.
Yeah, I mean, I personally have started as of a couple of months back, and it's just a matter of I mean, there's no such, you're not born with the knowledge, right? It's just a matter of putting the effort to learn, and just it's a matter of discipline, I think, at the end of the day, and consistency. So Chris, we're glad to have you on the show on Thursdays. I appreciate your time for coming on today. We'll have you on board next week.
Good man. Thanks, Tim.
Thanks, Chris. I'll catch you soon.
Cheers, man.